Okay, we're ready here to start talking about NEO and their earnings they reported today. You see they're down nearly 10% today. It was about time this beast cooled off. This thing was running massive increases. We're talking 15% really. Really prior to today, we were talking increases of 27% in a matter of a few days. A couple days where it was up 10% each. So you see a downward movement today, and it really is a result of the earnings if you think about it. So we'll take a look at these earnings and see what the reasoning is. So NEO, quarter one non-GAAP EPS of negative 22 cents, GAAP EPS of negative 23 cents. Honestly, not all bad considered. Beat by 1 cent, nothing massive there. Pretty well in line as far as EPS is concerned, which isn't awful. Revenue of $193.76 million. Whew, gosh, that was a decrease of 53.2% year over year, but beat by $18.16 million based off consensus. Now you look at that number down 53%, and you're like, what the heck? This is a big, massive growth stock. What is going on? Well, one thing you need to consider is think about Chinese auto. First off, the industry had been struggling. And then we also need to consider the fact that this quarter for NEO here was during pretty much a nearly 100% shutdown for China. This entire quarter for NEO, maybe without a month of it, fair to say maybe only a month was without lockdown. And at best a month was without lockdown. So people couldn't buy anything, right? They could not purchase this stuff. And they weren't able to get out deliveries because it's just everything was shut down. So that's where you see that number, why it's not looking good. And as we talk about it, we'll look at the details here in a little bit. But you see, because of that reason, Bank of America is defending this, and they've actually rose their price target from 5 to 5.50. Pretty interesting, all things considered. I like to see that. But Bank of America reiterates buy. The firm points to higher volume sales forecast for 2020 to 2021 and easing of uncertainty associated with fundraising after the investment agreement with the government. The improvement in NEO's vehicle gross margin on higher sales and cost reduction measures is also mentioned as a favorable EV purchase subsidy scheme. So again, Bank of America sees good things. I mean, normally analysts are pieces of garbage, and they kind of are, but and I think I agree with them, though. We talk about April, in which they saw a 180.7% growth year over year. That is right. Yeah, I mean, 3,000 vehicles alone in April, and that's obviously not including this, because in this quarter we went ahead and saw a delivery of only 3,800 vehicles. So that boost, that massive boost, you see there's demand for these vehicles, and, well, the demand is there. And they will report the demand, right? So this next quarter for them, I expect to be pretty massive. The demand's there, and people are finally able to purchase things. They delivered, deliveries fell 3.8% year over year only, which all things considered isn't that bad. But the difference is product mix. The mix included 3,600 ES6s and 195 ES8s. ES8's kind of a dud for them. Total revenue was down 15.9% and 51.8% quarter over quarter. So I don't know why they gave this number on this. This is a quarter over quarter number, which you expected it to be awful. But year over year, you actually only saw a decline of 15.9%. So they're also expecting deliveries of 9,500 to 10,000 vehicles in Q2. Are you kidding me? That's 3,000 plus vehicles every single month. And honestly, they're on the path already, and we see it here with this sales beat here. 3,105 to 155 vehicles in April. You see it there. I mean, you see it there, and I believe these estimates, it's going to be darn close to this range here. And all things considered, 15.9% down year over year, not bad for a literal pandemic that closed everything. If we want to compare that, which I think it's fair to other car companies, and these are ones that have been impacted less, guess what? Ford's automotive revenue was down 15.8% year over year as well. And this is a company that actually had less effect overall from this. They had less of their quarter impacted. they're expecting next quarter to be a lot worse than what NIO posted this quarter. So all things considered, you're going to see Ford decline more. GM is another one to mention, down 6.3% year over year. They're a company also expecting next quarter to be even worse because the shutdown is going to affect them even longer. Both Ford and GM only had 1 month of shutdown included in this quarter. NIO had, at a minimum, 2. It was a little bit more than 2. So, honestly, their numbers were not that bad, all things considered. I think the stock just cooled down entirely because of the fact that it's been so hot. So, I don't think it's necessarily anything to do with the results in particular. I think it's entirely just due to the fact that the stock's been going up so much, because I didn't think the results are that bad for a 100% pandemic quarter. So, if we go directly into the results here, and we take a look, obviously, in the deliveries here, the difference here. Quarter 4, they posted 8,000 vehicle deliveries, and that's why you see a 50% decrease in revenue. Nothing crazy, all things considered. But if you go back to 2019, quarter 1, 3,900 deliveries. They post 3,800 deliveries this quarter. That's why you see a little bit of a decline. Quarter 2, though, they posted 3,500. So next quarter here, quarter 2 of 2020, you've already nearly beat that estimate just off of 1 month alone. So pretty crazy if you look at it that way. The product mix wasn't amazing. ES6s, I think the EC7s, when they release them, are going to be very big this upcoming quarter. I don't know if it'll include it. It might, because we really won't see deliveries until late July. So it probably won't be included next quarter. It'll probably be Q3, in which case Q3 should be massive for this company. Some of the mentions here. Gross margin for the vehicles was negative 7.4% compared to a negative 6% in the fourth quarter and a negative 7.2% in the same quarter of last year. Margin hasn't really increased all that much. And again, I mentioned this when we talk about electric vehicle companies, the hype beast of Tesla. They also had negative margin for many, many years starting off, and they finally are getting positive net margins on their vehicles. So, gross margin negative 12%. Compared to a negative 13.4% in the same quarter of last year. So not bad, all things considered there. Total revenues, $193.8 million in the first quarter, representing a decrease of 51% for the fourth quarter. I don't like that, but net loss from operations was $221.8 million in the first quarter, representing a decrease of 44% from the fourth quarter loss, and a 40% decrease from the same quarter of 2019. So they are showing improvement in terms of that loss number, and they did receive $1 billion in funding. So clearly you can tell they'll be funded for the rest of the year. They have the money to be funded for the rest of the year if they're running at that same loss rate. And from there, again, I mentioned this company is going to get bailed out by the government consistently if they have to. The Chinese government will make this company succeed as long as they can, or they'll keep them in business at least. They've already made a $1 billion deal now, and I think other companies will be able to fund them, even if it be SoftBank, whatever companies might possibly fund these. So, again, I think they'll be perfectly fine. That net loss number I don't like, but for a completely spec stock for me, I'm not too upset. So, let's see. Vehicle sales again. Nothing massive we see there. Vehicle margin, don't like that. But you see a big net loss difference, and they're giving this obviously in Chinese yen. So, but deliveries in April, they had to give this one. Deliveries in April were 3,100 vehicles. Massive growth, 105.8% month over month. Huge, doubled month over month. Deliveries consisted of 2,900 ES6s and 248 ES8s. Kind of boring. No one really cares about the ES8s. They're not really the premier vehicle for this company. The ES6s are the play. And you see it with Tesla too. I mean, typically it's one vehicle that's really their winner. The Model 3 is their winner right now, but it just depends. And I think the EC7 will overtake the ES6 at some point once it comes out. So as you see, on April 29th, the company announced that it entered a definitive agreement for investments in NIO China with a group of investors led by Hefei City Construction and Investment Holdings Group and Hui provincial emerging industry investments company. Very cool. So under the definitive agreement, the strategic investors will invest an aggregate of 7 billion yen cash into NEO Holdings, the legal entity of NEO China. NEO will inject its core businesses and assets in China, including vehicle research and development, supply chain and sales, and services, and NEO Power into China. The asset consideration valued at 17.77 billion as calculated based on the 85% of average market value of NEO Incorporated. So NEO will hold approximately 75.9% of controlling equity interest in NEO China. Pretty cool. So, very nice as far as that's concerned. Confidence from the CEO. Nothing crazy on that aspect. These numbers are ones that really already went off of. We already looked at all this stuff. We need to look, obviously, as far as business outlook. Very excited for this one. 9,000 to 5,000, or 9.5 thousand to 10,000 vehicles expected. 147.5% to 160% increase from the first quarter, and an increase of 167 to 181% from the second quarter of 2019, year over year. Total revenue is expected of 475.7 million, pretty massive, to 499 million, representing an increase of 145.5% to 157.6 from the first quarter, and 123 to 120 or 134.3% in the second quarter. So that's overall doubling the revenue year over year, which, by the way, is massive. I'm just telling you that right now. And finally, we look here at the current assets in U.S. dollars. Total cash and cash equivalents, really not that much on this company, of 279 million, which is really what they lost. So by that number, you get, only one more quarter left. But this funding agreement is going to be through the full year, so you don't have to worry about that. Total current assets of 899 million. Total assets in general of 2.166 billion, and a total liabilities of 3 billion on this company. So the liabilities are outweighing the assets, and that's because the company is still in its infancy, and it will grow out of that. I'm pretty excited for the future of this company and what they can offer, just because of the fact that they'll always be able to raise capital. I think they're going to do fine, all things considered, in the long run. I know there's a lot of haters on the stock. And I used to be doubtful of this company back when it was trading at $10 a share, but when it's, anywhere near the $3 range, I think it's cheap valuation. We're talking about a stock trading at a $4 billion market cap, but still, looking at an annualized sales or annualized revenue nearing the range of really $2 billion. I mean, what can I say? That's pretty cheap valuation for a stock like this. It's growing so massively. Typically, you see, people trading at insane other values. Just for a reference, and I wanted to mention this, you see Tesla trading at a market cap of 150 billion. And then we're going to look at the annualized revenue, so 150 billion there as far as that's concerned. And if you look at a trailing 12-month basis for revenue, really only 26 billion there. So they are trading at approximately, which is insane, by the way, 7 times their revenue as far as their market cap is concerned, which is pretty insane, all things considered. Now, and there's reasons for it, because Tesla's proven that they've gotten out of the initial start of the business phase, and maybe that's when NEO will get valuation quite expensive like that. But obviously Tesla and NEO, completely different companies, right? Completely different companies we're talking about here, but I'm just going off valuation. You can see that right now NEO's definitely a cheaper valuation, but it's not a stock that's proven itself yet. The company hasn't 100% proven itself to investors, and I think once it does, you could see this valuation skyrocket. Again, I say $10 by the end of 2021, $5 by the end of this year, which isn't that much more room to go this year. but I think it's just a growth story from there. Really excited. I think you're expected good things for this company as a spec position. Only a spec play. Don't have it make up more than 5% of your portfolio, otherwise you're insane. But I think it's a good speculative play, and I do hope you enjoyed.